Welcome back to the channel, guys. My name is Jess. So Bitcoin has been absolutely trooping along after breaking above $63,000. The price has been hovering around $67,000 for about 2 days now and is looking exceptionally bullish on both the short time frame and the macro charts. So let's dive into the video today to talk about the potential for a break above $67,000 on the short time frame and what the recent price action means for the macro future of Bitcoin. Before we get into all that though, make sure you guys like and subscribe to the channel down below to get regular Bitcoin analysis every Wednesday and Saturday, and ring that notification button so you never miss an episode. If you want even more content, be sure to check out my free Telegram channel over here, where you can get daily Bitcoin analysis as well as crypto and economic news. If you're interested in my VIP channel, you can check out details over here. VIP gives you exclusive access to my personal trade setups, including exact entry points, targets, and stop losses, as well as trade justifications and a risk management and trading journal. Alrighty guys, so before we get stuck into any sort of future price action, let's start off by talking about what on earth has happened over the last couple of days. So in my last video, we had just started to look very, very bullish for a breakout above this level of support here at $63,000 on the short time frame. Right, you guys can see this trend line over here. We were forming a very clear ascending triangle pattern. And upon CPI news later that night at 10:30, we had a huge bullish breakout that took us right up through the whole measured move of the triangle to $67,000. So that's where we're currently sitting. And as you guys can see, we have a couple other relevant levels of support here on the short time frame. And we have a very key clear resistance here at 67K. So let's dive in to talk about this most recent segment of price action here, its macro implications, and how you'll be able to tell whether or not we're having a bullish breakout or we're about to see another breakdown of the price action. Before we get into any more analysis, guys, let's hear a quick word from our sponsor, BitUnex. BitUnex is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. So I wanted to start off today's analysis with the macro charts, and this is specifically because the macro charts are looking exceptionally bullish, and I do want to point that out before we get into anything else. So as you guys can see here on the weekly chart here, we are about 2 days away from forming a bullish engulfing candle. So essentially, bullish engulfing candle, for those of you who don't know, is bullish as the title suggests, but it is formed when the current candle, or the most recent candle, is overtaking the prior candle, and that is generally when it's like red and then a green, or a green and then a red, right? So it's a reversal pattern. So prior to this, on the macro charts, you guys can see very clearly that we were in a significant macro downtrend, right? All the candles were red and we were going downwards. Even the small little green candle over here wasn't particularly strong. And we continually saw retests of $60,000 from those little wicks down the bottom here, right? But this most recent candle is essentially telling us that the selling pressure that we've had in the last week, right, has been exhausted, and the current buying pressure is overtaking any sort of strength displayed by that selling pressure in that prior week. So in 2 days, when we close that bullish engulfing candle, if it is over $64,000, that is again exceptionally bullish and suggests a full-on macro reversal. Another thing that we can see on the weekly charts is the fact that we've broken above this key level here at $65,500, right? If you guys have watched any of my last videos, you guys know why it's important, and that is because it is the weekly candle close for the all-time high in 2021. So it represents a massive level of resistance, and breaking above $65,500 tells us that if we establish that as a base of support on the macro charts, we should continue to consolidate within the $65,500 to $69,000 level, that key range of resistance represented by these candles over here. So that tells us that if we go back to the short time frame, we'll continue to consolidate within these upper ranges over here. So from $65,500 to 69,000, this little range over here, telling us that we finally moved away from this trading range down the bottom here from $57,000 to $67,000 and potentially to these upper levels of the range and potentially a macro bullish breakout above 73,000. So now we know why keeping these levels or these upper levels above $64,000 is so important. Let's dive into the short time frame charts and talk about the likelihood of that happening. So first of all, we'll talk about the key levels that we've recently traced as bases of support in the recent move. So zooming into the 1 hour chart, just so you guys can see a little bit better, our first key level support, that's pretty clear. That is the $63,000 level over here, right? That's our most recent support to resistance to support flip, and it was a extremely strong level of resistance, and so should conversely act as a strong level of support. Just above that, we have that key level, $64,000, right? If you guys remember, $64,000 was the opening price for that prior weekly red candle, so we want to be closing above that level of support to maintain that weekly candle close. And that ranges from 64.3 to 64.5. You guys can see the corresponding levels of resistance or rejections from that as a base of resistance. And the most recent test of $64,000 led to our latest retest of 67. Next, we have $65.5 thousand. So again, another key macro level, right? $65.5 to $65.7 thousand. We can see that rejection from the head and shoulders pattern at the top here was from 65.5 and a couple retests of 65 as a base of support before continuing upwards. So on the short time frame, we are in an upwards trajectory, right? So we have this small short time frame chart over here, and we have a very clear, good looking uptrend. We've got 3 points of validation, right? It also has RSI, sees RSI confirmation down here. We pull up the RSI, draw in that trend line. Right, so while we are above an uptrend, for all intents and purposes, we should be going up. The trend is your friend until it ends, right? So while we are above this level here at $67,000 and continue to travel upwards above the trend line, we should see a break of this level of resistance and continue in that upwards trajectory. So zooming out onto the 4 hour time frame as well, we can see that this larger RSI uptrend is also still intact, and we are, for the first time, forming higher highs, right? Continually forming higher highs on the higher time frame chart. So I know this is only a 4 hour chart, but you can see it on the 12 hour chart as well, and on the daily chart. I'm just here on the 4 hour because I like it here. But if you take a look at, these highs over here, they're all lower highs. We will consistently forming just simply lower highs in the prior 2 months of price action. But ever since this candle here, this candle close here over here at $64,000, right? This next candle at 67 has been higher than 64. So the bullish case scenario is still intact as long as we hold these levels of support above $64,000 and continually form and validate this formation of higher highs and higher lows over here. The only thing that's really suggestive to me of potentially seeing a short time frame retracement before we get a break of the 67K resistance and continuing upwards is the bearish divergence we have here on the hourly chart. So we can see on the hourly chart we have got 2 higher highs, right? We've got that high at 66,600, and then we have another one just here at 67. But on the RSI, we can see that we're approaching this level of resistance here from a position of decreasing buy momentum, decreasing strength, and that's generally normal over the weekends. We are going to get decreasing buying pressure. We are entering into Saturday, right? A lot of people aren't going to be trading on the weekends, trading volumes down, etc., and that is normal. But if we get confirmation of a breakdown here because of this bearish divergence and we fulfill that pattern, what that's going to look like is a break below this RSI uptrend on the short time frame, and then a retracement to our next local levels of support. So we have our closest local level here at $65.5 thousand. So what we might end up potentially seeing is a breakdown from 65 and then a bounce before we move back upwards. But again, guys, like I said, even if the short time frame does end up doing that, if we zoom out, the main key thing that we're looking for is a continuation above the 64K level and a continuation of the formation of these higher highs here. So if we take a look at the 4 hour time frame, what we might end up seeing based on that potential trajectory is a formation of an ascending channel. So let's just quickly draw that in so I can show you what that might look like. So this is purely speculative, but this is what the future price action might look like if we get that pattern fulfillment. So let's draw in the parallel channel. We have 2 higher highs over here, and we have this base. So say we reject from this level over here at $67,000 and we move down to test our local level support at $65,000. That would confirm the formation of this parallel channel, right? Because we have horizontal confluence at 65.5 thousand. Next, we might bounce from 65 and move above $67,000 before going back down and retesting 67 as a base of macro support, right? The midline of the channel, massive level of support, before finally getting the measured move for the ascending channel formation, right? That is potential scenario. Obviously, it's still very speculative, but I'm just trying to put into perspective that the short time frame downwards move that we might get to 65 because of that bearish divergence doesn't particularly affect the higher time frame charts and the macro trajectory. Alrighty guys, that is all the analysis I have for you today. If you enjoyed the video or you learned something, don't forget to like and subscribe to the channel down below. If you want even more content, I do have a free Telegram channel where you can get daily Bitcoin analysis as well as crypto and economic news. If you're interested in my VIP channel, you can check out more details over here or in the website down in my bio. VIP gives you exclusive access to my personal trade setups, including exact entry points, targets, and stop losses, as well as trade justifications and a risk management and trading journal. If you are a trader, don't forget to sign up down below to BitUnext to get up to $5,500 US in rewards and 15% off all of your trading fees. Hope you guys have a really great week, and I'll see you next time. Bye.